Thank you for your kind introduction. Thank you very much for inviting me to the very impressive event. So it is also my pleasure to be given the opportunity to speak at the FinTech webinar series at the ZIBS. And today I'm going to speak about the decentralized finance technology and governance. So can you hear my voice okay? Okay. So please turn to next slide. Okay. So before starting my physical part, let me briefly explain who we are and what we do, especially comparing to the other financial regulatory bodies in other jurisdictions. Roughly speaking, the JFSA is a Japanese counterpart to the CBIRC in China and CSRC, Securities Commission in China. So as illustrated in the first slide, so the regulatory perimeter in each financial authority are very various. So we, JFSA, act as the integrated financial authority, embracing the regulation and the oversight of the banks, securities, insurers, and the capital market players, and the payment service providers, as well as the crypto asset exchanges. So compared to the other regulatory bodies, so we have a specific function of the other financial authorities. So we have the relatively broader capacity because we have a policy planning function on the top of the horizontal column. So in other jurisdictions, so in that function, maybe ordinary case, almost all case, Ministry of Finance is responsible for the such kind of policy planning on the kind of making legislation process for new regulations. So, but JFSA has a capacity of the making rules and standards in the financial market. So using this capacity, so we are able to commit the policy issues in very timely manner. And of course, we also address the fast changing crypto assets market by multifaceted function equipped and embedded to us. So let's move on to the next slides. Okay. We would like to start the G20 Declaration. So today's my talk is going to highlight the issues on the decentralized finance. As for the term of decentralized finance, some people call it as DeFi or DeFi, but it is not precisely defined yet. But as the FSB report, which was released last June on decentralized finance technology, states that it is a decentralization of the financial services that refer to the elimination or reduction in the role of intermediaries. More simply, some people argue that it would be equivalent to the kind of token based or blockchain based economy as a whole. The first slide illustrates the excerpt of the G20 Osaka Leaders Declaration that highlights a part. And last year's G20, we gained a good momentum in the area of crypto asset and decentralized financial technology. Last year's G20 was held under Japan's presidency, whereas the G20 leaders have discussed the technological innovation of the financial system, anticipating that decentralized technology will be deployed with an environment where the benefit can be fully attained. So after cumulative discussions made in the FSB, G20 leaders have endorsed the FSB reports and have reached a particular consensus on accepting the necessity of the wider stakeholder dialogues, especially anticipating fast-moving decentralized financial technologies as illustrated. Okay, next slide is for your reference for the also the communique of the G20 Fukuoka before the G20 summit in Osaka. So it is a this statement has a same type of message in this communique. So next page. Okay, for recent decades, so as you know, especially after the financial turmoil experienced around 2008, cumulative wisdom of the new financial technology has been being built, and this architecture is going to fully transform the incumbent financial services. Among others, the open and distributed technology could fully replace the conventional, conventional business, and this may allow for the provision of the banking services without the banks. The virtual currency, which are now collectively called as the crypto assets, have been deployed by launch of the Bitcoin after 2008, and it is becoming a main driver of the financial transformation that leads to the new concept of digital currency and digital tokens, such as the ICO in later years. In the main technological wisdom embedded in the Bitcoin-based blockchain technology, the long-standing double spending issue in digital cash is technically resolved in combination with the consensus algorithm and economic incentives through the mining and the distributed network provided by the internet. Also, immutable future of the blockchain provides revolutionary changes of the running digital ledgers in more robust manner. The wisdom of the blockchain technology, originated in Bitcoin, is going to extend further applicability through programmable Ethereum-based applications. Using this technological wisdom, so contracts with the counterparty will be smarter than before, and such Ethereum-based solution will give rise to revolutionary changes in the finance and the commerce, or to form the decentralized financial services. The next page, page 7. Okay, page 6, 7. Okay, 7. Okay, page 7. Okay. Okay. As illustrated in the, as stated in the Osaka Declaration, crypto assets do not pose a material threat to the global financial stability at current juncture. The market cap of crypto assets are still quite small in global financial system as compared to the incumbent services. You may think the widely accepted deployments of blockchain may not come true in near term, because many people recognize that there is an underlying technological immaturities as to the issues of scalability and lack of finality and so forth. But at the same time, we recognize that its wide acceptance of blockchain would bring the great potential to replace conventional rules, change the game, and even transform the way of trust. Okay, next page. Okay, this is the original paper of the Satoshi's paper. This is Satoshi's paper, and its first sentence of the his notes. So as you know, the nature of the decentralization is a principal factor of the blockchain. Crypto assets underpinning technology of blockchain, so are basically designed to attain full P2P transaction, where any economic intermediaries, such as crypto asset exchanges, are not anticipated in the transactions. The Satoshi's paper clearly notes the motivation in the first, this motivation in the first paragraph. So this perfect non-intermediary system designed by the cipher engineers may give rise to changing the role of the regulator. In general, regulatory power is, generally speaking, regulatory power is sustained by the economic intermediary or economic agents, financial agents, which stand as explicit and physical regulatory targets. such like banks, insurers, crypto asset exchanges, whatsoever. But in reality, in the current crypto asset businesses, Japan imposed a requirement to the crypto asset exchanges to counter the anti-money laundering by introducing the customer identification rule and service. This is motivated by the standards made by the Financial Action Task Force, which is the intergovernmental organization for setting the standard of the anti-money laundering. So I want to touch on the issue right now is later stage. Okay, next slide. Then okay, let's think of the why regulators lay out the such regulations. So we should be aware of regulators' motivation first. Financial regulators generally have the three coherent regulatory goals, such as to attain the stability of financial system, or to protect investors or consumers, or to prevent the financial misconduct, including financial crimes and money laundering. So, okay, next slide. Yes, this is a very complicated kind of regulation. So, please look at the above is the business layer. The bottom is the technological layer. Contrary to the Satoshi's motivation, the current crypto asset business is sustained by the clear, economic agents such as the crypto asset exchanges. The middle part of this slide. So this implies that the current business is not attaining the full P2P transactions. Current regulatory structure, which impose the regulation to cryptocurrency exchanges, do not provide full guarantee onto the daily transactions, since we face a new type of risks that emanate from the technological layer, from the bottom side. So in crypto-based transaction, so somebody make a noise. Can you hear my voice? Okay.
Yes.
Inherent nature of the crypto assets, cryptography provides a technological risk, such as cipher compromise that may be susceptible to the decryption over time. And 51% of attacks, which is a specific risk to the current mining structure, and the new threat of attacks from the cyberspace, such as the DDoS or the malware, something. So, we're subject to the such kind of risk. So, under this anticipated situation, who cares such risks? So, the regulation could not pose any prescription to technological issues, or could not be an effective medicine, could not provide any effective medicine to such risks. In near future, decentralized exchanges and the layer 2 network that operate autonomously will eliminate the current agent business, such as exchanges. Assuming this, so we will face the reality of lapsing or reducing the explicit regulatory targets, and we will face the new challenges as to whether we are able to sustain our regulatability, or or whether we are able to ensure the robust security and to attain the privacy and traceability simultaneously. Such new risk heavily weigh on our regulators and pose a new difficulty in achieving our regulatory goals. So especially we should consider the contingency plan when we face a new type of technological risks, and necessary governance and establish a necessary governance regime to technically address a new type of risks, as well as the of course as well as the fruits of innovations. Sorry, next page. Okay, sorry. Yes, next slide is maybe some text is sorry vanishing. So left-hand side is a decentralization. The middle is autonomous, and the right-hand side is anonymity. So the regulation could not, as I stated, so a regulation could not pose any, jurisdiction, technological issues. So in addition to the kind of nature of decentralization, the autonomous nature in blockchain may prevent us the halting the transaction once the system starts its operations. So, and in addition to that, artificial systems controlled by the programs or computer codes would never stop regardless of the third-party intervention. So as if we are fighting with an invisible ghost or something. So if we take the policy that prohibits the for crypto transaction, it may help the activities go over boundary or go underground in the darker market. So in addition, anonymity nature also pose the new incentive for hiding the privacy, which could reduce the traceability and the difficulty in legal enforceabilities from us. So thus we should rather review the whole ecosystem of blockchain that highlights how we manage such a system than stopping the current crypto-based transaction. So the next page, please. This illustrated by made by our Vice Minister Ryozo Himino. So maybe this is based on the presentation material in 2018. So as you know, Japan is the first wave jurisdiction of early adoption in regulatory framework of the crypto asset by introducing the legislation requirement for crypto asset exchanges in terms of enhancing anti-money laundering. And the framework introduced 3 years ago, and thereby crypto asset exchanges are subject to our regulatory perimeter. After implementation, we have experienced, unfortunately, several hacking incidents at exchanges, and we are also experienced the issues on the scam scheme of the ICOs, something. So, in response to this, so we have taken further steps for formulating regulatory framework of the crypto assets. So, the regulation of the securities token offering (STOs), which will be implemented this year, and this would be one tangible solution from us, JFSA. So we have taken an approach to regulate the crypto asset transaction, but it is broadly acknowledged that the different type of approaches to crypto assets have been taken among various jurisdictions. Well, it may be a sort of the taxonomy of approaches, but we can classify broadly four types of options for regulator to exercise. For example, to prohibit or ban the activities, to monitor the transaction, or to regulate entities or activities, and finally to ignore the kind of new type of activities. The first is prohibition. So I understand that to some extent that China, India, and Indonesia and Russia have banned such activity related to the crypto assets kind of transactions. So generally speaking, this option has an advantage that no harm will arise from regulated entity. But prohibition may foster the more cross-border transaction or make activities go underground. I stated before. So the prohibition may stifle upside return of the innovation to kind of next generation. The second option is a regulation which we adopt. The New York State Authority has started the issuing the bit license since 2015, Also, the European, European Union amended its money laundering and anti-money laundering directive to address the crypto assets. So, for us, for JFSA, so due to our regulatory framework and cumulative experience of hacking incidents, so we implemented our supervisory scheme, oversighting scheme. So currently, we know the inflows and outflows of cash and to and from each type of crypto asset and the age group composition of the consumers, changing the kind of buying selling spread and the governance, our risk management, cybersecurity of from the business of the crypto asset exchanges. So on the other hand, the regulation may entail the risk of the being misinterpreted as a sign of the endorsement by the authority. So we sometimes experience such a kind of misinterpretation. So some people have an interest in the spreading such a misunderstanding. So also if an authority is to assume regulatory responsibility, so it should be prepared to be criticized for the over-regulation by those who emphasize the innovation and for or regulatory procrastination by those who emphasize customer protection. The third slide, third option is the monitoring. The Financial Stability Board launched a framework to monitor the impact of crypto assets, in the work task force of the Financial Stability Board. So, if we assume the monitoring is done without regulation, authority will not able to impose the reporting requirement, and thus may need to rely largely on the information service website in the public domain or something. So if problems arise in terms of the financial stability and customer protection or marketing integrity or payment wrongdoing, so which case are identified, so action will be needed in addition to the monitoring. So the last option is ignoring. By using this, so authority can avoid being misinterpreted as having endorsed crypto asset businesses or taking the regulatory responses. So this option will be accompanied with the risk of the failing to notice or failing to notice the growing problem in the crypto asset market. So thus we should currently, as a standpoint of the JFSA, so we should explore an appropriate approach that is, compatible with the achieving the regulatory object and the promoting regulation. Yes, both sides is very important for us. So next slide, page 12. Okay. Earlier in my talks, I touched upon the kind of the technical challenges in the blockchain technology. So, especially highlighting the scalability issues in blockchain. So, as you may know, so Mr. Vitalik Buterin, who is the co-founder of the Ethereum, so provokes the scalability trilemma. As illustrated in the left side part. So this implies that underlying trade-off the blockchain scalability, referring to the security and the decentralization, which all three factors cannot be achieved simultaneously. While this twisting triangle represents the developer's trilemma. But other people, of course, the consumers or some businesses may face new trilemma if the scalability enhances in blockchain technology. So I can say that the more scalable transaction, the blockchain can be attained, the greater concerns over privacy and AML risk and the users and the regulation may have. The next slide, please. Moreover, many users may seek for the more convenience through the connecting to the other crypto assets. So interoperability will be a new variable, variable factor or variable item which cause more complex conflict. Next page, please. Next page. Okay. This is the footprint of our initiative. So assuming this, so we consider how blockchain stakeholders should lay out the governance of the decentralized financial system under such anticipated situation I experienced before. I explained before. So at the moment, so key factors such as developers, academia, and security experts and regulators in the blockchain ecosystem still independently worked without enough communication. So even under such very fragmented situation in the community, so it seems that at minimum, every stakeholder should have the necessary cooperation, or every stakeholder does not hope to make further frictions and unnecessary disputes in crypto asset transactions. So proper coordination is very important for us. So communication will contribute to the reducing the gaps between various stakeholders. So of course, we need to recognize it is hard to define the mutually understandable common language between us, and to create a place for building the consensus among various stakeholders. So especially from regulators' perspective, so facing the fast-paced innovation, we may firstly react not to lag behind the innovation. But amid no consensus of valuing technology and without communication between stakeholders, so maybe we regulator would face a dilemma between the over-regulation or procrastination of the regulation for the customer protection. So thus we need to properly recognize the underlying value of the technology, and we have to strike balance between regulations and the innovation. So we have to also coordinate the expectation among various stakeholders. So the thinking the future design for proper governance is truly of importance. So I especially looking at the future decentralized, kind of envisaging the future decentralized financial system. So we have taken the significant footprint to the open new opportunity, or having a dialogue with those who we have not met before. So to create the kind of healthy governance system. So at the first, so on the top left side, so we host the blockchain roundtable, fully hosted by JFSA, represent the role of the venue for the multi-stakeholder meeting. This roundtable has been extending the capacity. So this initiative started for several years ago. So, but now in the roundtable last March, so a major international organization such as the FSB, IMF, and OECD, and many regulators and central bankers around the world, and as well as a university such as MIT Media Lab, Georgetown University, Cambridge University, and the Keio University, come to join us in the same roundtable. So at the same time, so industry experts on the security and crypto assets developers have also invited to join us. Before the G20 summit in Osaka, G20 finance track in Fukuoka was held. Using this opportunity, we hosted a high-level seminar on the innovation and addressed the future design of the governance issues and the multi-stakeholder financial system. Especially in this, in the session, Mr. Adam Bach, CEO of Blockstream, and Mr. Krasnat, CEO of Dutch Central Bank from the regulator side, and Japanese expert from the academia, Mr. Shinichiro Matsuo from the Georgetown University, and also joined the Bratka from the e-commerce financial services. And the moderator was Mr. Jim Murai, who is a professor of the Keio University, who is called as the internet samurai in Japan, very famous for the internet community. So, various stakeholders discussed in one table in the venue of the G20. So we have made the multi-stakeholder discussion in the stage of the G20. Of course, after that, so we have the Japanese biggest fintech event called FinSam. This event is co-hosted by the JFSA and the Nikkei, which is the parent company of the Financial Times. Biggest economic newspaper in Japan. So we host the hold the event of FinSam. So we also have the further multi-stakeholder dialogue in the venue of FinSam, and we also have the kind of the discussion of the in order to learn the from other domain, such as the multi-stakeholdership from the made by the internet community. So we have hold such kind of sessions. So after that, so we have hold the several in various venues. So we have a kind of multi-stakeholder discussion, especially in the scaling Bitcoin in Tel Aviv last September. And after that, so DevCon, which is the very big event of the Ethereum community. So we have held the dialogue, through the multi-stakeholder type of discussion in the venue of DevCon in Osaka. And after that, so we also, I personally joined the Global Blockchain Congress, which is hosted by the EU Commission. So we also participate in such kind of conference to make the stakeholder dialogue, blockchain stakeholder dialogue. So finally, originally we intended to have the kind of the big blockchain event in March, but due to the COVID-19, so the event is now is postponed. So, but alternatively, we have the kind of the online session, participating the from the various area, including the academia and internet expert, and from the university and the regulators, and our commissioner also participated this online session. So I think that it's better to see the next slide, please. Okay, next slide. This is a roundtable. So this is a G20. So next slide. Next slide, yes. Okay. I think it's better to look at the video conference. It is the website. The relevant web link is very small, so stated in the below part of the slide. So our commissioner have expressed the delivered keynote message in this online session. So the commissioner expressed the fundamental motivation to seek for the new approaches. So he stated that in order to attain key regulatory objectives, so as I explained before, so and facilitate to deploy social benefits given by the innovation. So we regulator should explore the new approaches and necessary coordination with stakeholders So he also added that the internet may be the most suggestive case to consider the one idealistic model among various stakeholders to bring the governance, because the internet governance, history of internet governance is a very, kind of the kind of long history. So and achieve the one, established one idealistic model. So currently in the internet community, so internet engineering task force, IETF, is the acted as the kind of open and global and non-profit organization to offer a model for designing the kind of standard in the internet community. So IETF philosophy of drug consensus and running code could offer a model for the designing the governance in the financial system that will become more decentralized. So I think the blockchain-based system will have a lot in common with the internet architecture. So we should rather learn from the effort made in the other domain to reflect a new type of the protocol to the financial system of the future. So next page, please. Next page, please. Through the discussion, through the online discussion, so Dr. Shinichiro Matsuo from Georgetown University launched the new blockchain network called the BGIN. We call it the BGIN. So sorry, move back to the previous page. Sorry. BGIN is the new global network for blockchain and aims at providing the open and neutral sphere for all blockchain stakeholders to deepen the communications. So of course, the BGIN is in line with our G20 initiative. So many stakeholders participated as initial contributors, so to join the BGIN. So currently BGIN tentatively aims to creating the open or global neutral platform for multi-stakeholder dialogue and developing the common language and understanding, so among stakeholders with diverse perspectives. So of course the BGIN aims for building the academic anchors through the kind of continuous provision of the trustable document and based on the open source style approach. So now, so BGIN is the BGIN's materials are listed in the GitHub, and we are very open process. So we are open to receive the comments from the public domain. So of course we seek for the open or net neutral process. So next week, June 18th, so we have an online meeting. So if you would like to contribute to the this kind of BGIN's activity, so please visit to the website of the BGIN, so you can register the participation of the BGIN's online meeting. So sorry, next page, please. This is the BGIN's initial contributors. So from various kind of space. So of course the academia, developers, and of course regulators, including me, and currently acting co-chair is the Shinichiro Matsuo from Georgetown University, and my Santa Maria from the Irish Ministry of Finance. And of course the this is a kind of one contributor. So but the many contributors agree to join our initiative. So it's very very fantastic things so for us, because the we attain to launch such a kind of initiative by establishing and begin. So we, JFSA also one stakeholder would like to contribute to the this BGIN's activity. So of course, but this is just kind of the startup process. So of course, we would like to have the more the discussion deeply. So to make the kind of the constructive discussion in using this platform. So I think that the almost all explanation is completed my presentation. So lastly, so we once again, so the I want to advocate that thank you for providing the opportunity for presenting this webinar. So thank you for your kind attention. Thank you very much.
Okay, thank you very much. Yeah, can you hear me?
Okay.
Yeah, thank you very much for your in-depth explanation of the theme, and thank you for the audience for listening to what you have said. And I think it's a very in-depth overview of this point. And now we will have our distinguished guests to raise questions or have a kind of dialogue with you. And first, we will invite Mr. Professor Douglas Arne. Are you there? Yeah.
Yes, thank you very much.
Yeah, it's your turn after hearing the presentation of Professor Miwa. Do you have anything to say, or do you have any perspective to share? Thank you.
Very good. Thank you very much. And thanks for the invitation to be here. And thanks to Jumpei for, I think, a very comprehensive presentation. I want to pick up on a couple of things that Jumpei has covered. The first is, I think, when we think about this idea of DeFi, we have to break it down into a number of different ideas. And often we get started from the original idea of Bitcoin. And Bitcoin, of course, is the progenitor of the sort of blockchain trend that we're seeing, but it was designed for a very specific purpose. It was designed to be a decentralized alternative to state-based financial systems. We have to recognize that since that time, very few other systems like that, which really operate in a decentralized fashion, have effectively developed. We spent a lot of time talking, but Bitcoin in some ways is so exciting because it's unique. There haven't been a lot of others. Now, generally, I think what that then takes us into is a discussion of blockchain itself. And when we're thinking of blockchain, I think we need to think of it first from the standpoint of what does blockchain deliver? In other words, blockchain is not necessarily the solution to all of the world's problems. It is a potentially good solution for security, transparency, and permanence if the system is well designed. Now, if we think about that, what that means is that blockchain in the context of many applications around the world is very useful in certain contexts, but not in all. What we're seeing since the advent of Bitcoin is that if we compare permissionless systems, fully decentralized systems like the Bitcoin structure, to permissioned systems where there is some element of operator, monitor, etc., the numbers and the volume of permissioned systems dramatically exceed those of the permissionless systems. So I think that's a starting point, but we'll come back to that in a second. Now, once we start talking about blockchain and finance, I think we actually have to look at it from two different directions. The first is blockchain for financial services activities, and I'll come back to that. The second is blockchain for non-financial services activities. Now, where this all gets confused is we often throw in a third element, and that is financing blockchain, because financing a blockchain often takes place via blockchain-based systems. Now, the financing structures don't necessarily, it depends a little bit on what you're using it for. Now, if you are financing something, then the ways that you are looking at raising money, for the reasons Jumpei highlighted, draw regulatory scrutiny. After all, that's the risks of people being defrauded, et cetera, the massive bubble we saw in ICOs over the past couple of years. But once you look at the blockchain system itself, that system may be either for financial or non-financial purposes. And from a regulatory standpoint, we have to take a different approach to those. For non-financial blockchain, certainly standards, consumer protection, security issues are all very important. But we don't need to think of those financial regulatory objectives. But when we come into blockchain for finance, we need to focus on those financial regulatory objectives that Jumpei had highlighted. Is it a payment mechanism? Is it a financing structure? Is it some sort of infrastructure? And in these contexts, it draws in all of those regular regulatory concerns. Now, if we're thinking more broadly, when we think about future directions, I think we can see different things. The first is what largely has been done so far, and that is regulators trying to regulate the results. In other words, you look at the end, at the digital asset, and you try to regulate that as opposed to looking at the initial establishment. Someone had to establish it, and therefore setting an approval process. The second idea is in the context of RegTech. Can we actually use technology to embed those regulatory requirements into systems operating for financial services purposes? If so, then the role of the regulators is essentially to set out how those standards must be put into systems so that developers understand before proceeding. The final bit, because I think actually the first two in many cases don't work that very well, is I think what we're going to increasingly see, and that is regulators actually active in providing infrastructure. So if we think of digital currencies, for me, the future is probably not independent digital currencies like Bitcoin. It's probably not what we would think of as private global stable coins like Facebook's Libra. Much more likely, in my view, it's central bank digital currencies, which are effectively a form of government infrastructure, which can then support other forms of activities, in particular, embedding monetary and payment functions into blockchain transactions. Thanks very much.
Okay, thank you.
Okay, thank you, Professor Douglas. So Jumpei, how do you respond for that?
Okay, thank you so much. So I think we are always looking at the potentiality or the upside development of blockchain technology. Of course, we have both type of development of the permission and the permissionless type of this issue. So, but of course, we are currently looking at the blockchain for finance or for non-finance. So of course we are also especially highlighting the aspects of the identity kind of the initiative made by the various kind of international fora or something. So of course we are both type of the potentiality of the finance and non-finance. So, but of course, we are finance regulator. So we are mainly looking at the issue of the finance. Sustained by blockchain. But in case of the for fintech development, so currently the business is technically combined with the financial or non-financial business into one. So sometimes we look at the very complicated situation as a financial regulator. So of course the Libra pose a new regulatory challenges because of course we are financial regulator, so we regulate the financial activity or something. So, but of course many people concerned about the privacy or some kind of issues. So we this kind of issues are out of our regulatory perimeter scope. So we are always facing the new challenges. So of course we are struggling with such a kind of situation. So thank you so much.
Okay, Cass, I know you worked for IBM before and recently joined Cambridge Center for Alternative Finance. So we will be very interested to get your perspective, given you work for both practical and academic side. So would you like to let us know your perspective and insight for that?
Certainly, and again, thank you for the invitation, and it's a very fascinating discussion we've just had, I think. Jumpei mentioned three major criteria for DeFi: the need for stability, the need for consumer protection, and the issues around KYC and anti-money laundering, etc. And if you look at the story of DeFi over the last 2-3 years, there have been some major incidents which I think show those three things in sharp relief. So, for example, on the first topic of stability, we obviously MakerDAO being one of the largest networks for DeFi business. We had the crash of Ethereum, which happened March 11th, March 12th this year, when the price of ETH dropped from $200 down to around 95 or so. That caused major issues within MakerDAO, basically triggering an awful lot of automatic liquidations within the system itself. The Ethereum network got clogged up. The price of gas, as a result, spiked. And as a result of that, the automated bots, which is the way that the MakerDAO network actually works in that respect, got clogged up. And as a result, the whole point of this particular network, DAI, the stable coin, which is meant to be pegged to the US dollar, essentially a large part of it became not backed by any assets. And that led to significant multi-million-dollar losses and the need to refinance the network. So that was down, I think, to market stability kind of factors. Then on the second major heading of consumer protection, another DeFi network, the BZX network, suffered, as many know, a major loss due to the theft associated with exploiting a hole within the flash loan mechanism, the BCX. And then obviously all these networks, generally speaking, as Jumpei mentioned, are based on anonymity, and AML and KYC considerations are therefore a major counter topic as well. So I guess the point I'd make is, given the issues of anonymity, decentralization, etc., and the difficulties of being able to regulate in that environment, I think it does beg a major question in terms of should the approach be a dialogue with these networks, the communities that support these networks, in terms of helping address questions of stability, helping to address questions of consumer protection, to increase the quality of these networks, if you like. In particular, the governance mechanisms that those networks have and the maturity of those operational and governance mechanisms to make sure when these extreme events happen, be it either theft-based or operational resilience-based, that they are less likely to create major instabilities or as far as consumer protection is concerned, or to have or to approach it strictly from a regulatory point of view, and therefore the control element of this. So I think it's a balance between dialogue and control. One of my roles is I work with the London Metal Exchange on a committee that they have, which is the Technology and Operational Resilience Committee. So I have this understanding through this responsibility in terms of understanding for a large complex exchange. The LME is one of the biggest exchanges globally for the trading in metals, obviously. What it takes to actually put in place the necessary operational resilience features and functions within a complex trading system, in that case, in order to create the stability that's required. And I think it's an example of the sorts of maturity that needs to come to help these networks reduce the risk of failure, reduce the risk of threat and fraud in that kind of effect. So really, to summarize, I think it's this balance between dialogue to improve the quality and the safety in order to hit stability and consumer protection and AML restrictions versus the seeking of control, which I think in this environment is much more challenging.
Thank you so much.
Okay, great. So maybe from my side, I think I want to raise a question for all of you, because like 2 days ago, we had a discussion on Libra 2.0 in terms trying to understand how does it really change in the paradigm of the payment and also the international settlement. So because now, as all of you know, that now Chinese government, the central bank, they are also going to kickstart the central bank digital currency. So how do you see the central bank digital currency? I mean, now we have Chinese version, and obviously we also have the Facebook, and maybe also some of the discussion like the digital dollar as well. So do you see any opportunity and the challenges for that from your perspective? So I think the question is open to everyone to add for that.
Okay, but as a financial regulator, so as I mentioned, so we are mainly looking at the financial stability, or kind of the misconduct issues and anti-money laundering and the consumer protection and so forth. So, but of course, within our regulatory perimeter. So of course, for example, Libra type of transaction. Of course, I'm not fully sure about the future viable scheme by Libra. So just release a white paper, currently second edition. So we haven't seen any kind of solution of the Libra release. So but currently, in case of Libra, including a global stablecoin, so of course such a kind of new proposal pose a new regulatory challenges. Of course, the financial authorities. So of course we have to rethink the current regulatory perimeter, more extensible manner. So, of course, the current situation, especially in Libra, so Libra has a explicit kind of operators. Libra Association was a Calibra acted at the kind of the main operator of Libra's transaction. So, in this case, so we capture the financial transaction within our regulatory perimeter, because this standards the explicit financial kind of regulatory targets. But even in the white paper in Libra, so Libra Association maybe 5 years later, Libra white paper aims to provide the permissionless type of the kind of transaction. So this implies that the transaction by Libra without human intervention. In that case, so it is difficult to capture such a kind of kind of ghost. It's difficult to capture such a kind of the the business no any human intervention. So of course this Libra type of transaction, so we have to consider the other elements of the issues, such as the privacy concerns or something. So our competition issues. So this is fully out of our regulatory coverage. So of course we have a new type of coordination with the other regulatory domains, such as the competition authority or some kind of the privacy authority, something. So I think that we have this new type of challenge. But in case of the CBDC, so I think a completely different context from the financial regulator. So I think that, of course, the last year G7 or G20 published the kind of the report, a paper of the global stablecoin issues, of course, including implication of the CBDC. So I think the currently this sometimes contains the issue of the monetary policy or kind of the global monetary cooperation, something. So from we are acting as a financial regulator. So we are also addressing the financial transactions or financial stability. But of course, we are whole design of the financial system, looking at the financial system. So also we are pretty much pay attention to the kind of the aspects of the financial stability by using the central bank digital currency. So this is just our current standpoints.
Okay, thanks, Jumpei. And I think Professor Douglas I think because this afternoon we saw that your article in terms of Libra, digital yuan, and the COVID-19 central bank digital currency and the new world of money and payment system. So we would very much like to hear your perspective, and perhaps you can help us elaborate a little bit on your new article on that.
Thanks, Hanyi. And I think the Libra discussion is a good example of the point I was highlighting earlier, which is looking at the sort of different functions. And if we look at Libra 1.0, I think the challenge there was that it was Facebook. It was a global company. They weren't working with the sort of policy and regulatory community. They had proposed to create something that would be an actual sort of digital form of money that would eventually be decentralized. And so that raised a lot of concerns. If we compare Libra 2.0, Libra 2.0 is very different. And so is the sort of Libra Association and its recent hires. All of its recent senior executive hires, CEO, head of compliance, general counsel, are all heads of compliance at major international financial institutions. Another one just announced today. So what we've basically seen, Facebook made the proposal. It was so, I think it had a tremendous, it was game changing. It had a tremendous impact because of its potential to change things. But what it also did is it caused major country financial regulators to come together. And basically by coming together, Facebook had to back down. There was no way it could proceed with its plan without the buy-in of those major country regulators. And as a result, Libra 2.0 is a very different sort of thing. It is effectively sort of single currency stable coins linked to individual fiat currencies and individual financial systems, albeit with a sort of basket made up of these individual pieces. So from a major country, major currency standpoint, it's no longer really in any way a potential competitor. It's now something that is working with them. From the developing country context, it is still a potential competitor to their own sovereign currencies and the like. But I think when we look at this, the key is what are the problems? And I think there were two things that we are looking at. One is what I highlighted earlier, and one of the challenges in sort of use of blockchain more broadly is how to get a dependable payment and monetary asset in there. And this was, you know, if we look at some of the things that have been used, none have been ideal. And so probably the ideal solution in some way involves the central bank, either directly providing liquidity to a system, a sort of finality utility settlement coin sort of structure, or perhaps the Libra 2.0 structure, or providing the asset directly in the context of some form of wholesale or otherwise CBDC structure. That's one set of problems looking for a solution, and I think we're moving in that direction. The other area where Libra was really highlighted, the problem looking for a solution, was this idea of the costs of global cross-border payments. And Libra 1.0, Libra 2.0 both offer a potential mechanism to reduce those costs. But I think we have to divide these different ideas, because coming up with a solution to global payment costs is very different from coming up with an embedded monetary instrument for blockchain-based environments. And I think if we separate those two, will be better placed to come up with solutions which will in all likelihood involve different things and different players.
Right. Thank you very much for Professor Douglas, your perspective and insight. So Cass, with that, we have the Jumpei as the position as a financial regulator, and I have Professor Douglas from academic side. We also want to hear the voice from you.
Thank you. So going back to your original question on CBDC, I think this is a fascinating area at the moment. Clearly, as you mentioned, there is a lot of activity going on amongst the central banks. So it's very interesting, I think, to see how the Chinese implementation progresses. I think everybody is looking, because in many respects it's the most advanced potential use of CBDC and the impact it may have. and how it will work in practice. And if you compare that to where other major countries are at the moment, for example, here in the UK, the Bank of England is still in a consultative process, working out with the industry, with market participants, etc., what a CBDC might look like and what problems it would need to solve. The Banque de France in Europe is working through a POC at the moment, as you may know. And as you referred to, the digital dollar is kind of at the white paper stage, nowhere near any kind of first stages of implementation. So just in those three examples, there's a huge gap already, I think, between what other major economies are doing from a CBDC point of view compared to what China is doing. So I think, that gap potentially will widen even more because of the ability within China to progress implementations with the partners that the People's Bank of China is working with at the moment. And I think many of the benefits of that approach for China itself will come even more apparent as the developments progress. And I think it's going to be a really fascinating situation to see how the action and reaction plays out as those implications become more and more evident in terms of things like global trade, what happens with One Belt, One Road, all these other major initiatives where CBDC could have a major impact, dollarization, etc. And the gap will, I think, even widen even more so, and exactly how it may get bridged at some future stage, I think is going to be fascinating because there's a lot to follow and a lot to learn, I think, from what's happening in China as far as CBDC is concerned.
Okay, thank you very much for all of your input on that. I think we still have a lot of maybe discussion that we are very excited to continue, but due to the time constraint, maybe let's stay in touch and to see maybe how could we maybe to have the further discussion and work together in that journey. So with that, maybe may I also take this opportunity to announce our next webinar, which is on next Wednesday. So thank you very much for our distinguished guests and also all of those following us today online. So next Wednesday, 17th June, 9 a.m. Beijing time, we have pleasure to invite Ms. Simona Mola, who is the former Assistant Director of U.S. Security and Exchange Commission. So she will speak for the SEC enforcement activity on cryptocurrency in the time of COVID-19. So should you be interested on that, please do join us next week. So thank you very much for Jumpei and Douglas and Cass to join us today. So let's stay in touch and I hope to see you in person.
Yes, thank you. Thank you so much.
Thank you very much.
Thanks, everybody.
Yes, thank you, everybody.
Okay.
Take care of yourself.
Have a nice day.
Yes, nice day. Thank you.
Bye.
Bye. Okay.